Hello friends, welcome back to part 10 of my Tesla earnings forecast video review series. I'm joined as always by my co-host Loki, who is out like a light. In the previous video we reviewed this quarterly revenue chart, and it's the only chart I got to in the previous video because I gave you a behind the scenes look at how I created this chart and a preview of what it's going to look like after Q4 hits. So in this video I'll make up for that by covering 3 different charts, if I can hit the right buttons while I talk. So this one is showing you how Tesla's earnings per share is growing over time. And it's an unusual look at it. It confuses even me sometimes. If you notice the pause that I just gave you, that was from me going, hey, wait a minute, shouldn't this say 2022 at the bottom instead of 2021? I'll explain to you and myself at the same time what's going on. The clue is in the title. It's Tesla's next 12 months non-GAAP EPS. I wanted to confuse everybody, including myself, and I did it. So over the next 12 months, the following 12 months, this is what investors care about. You do not care what has happened in the past as an investor. What you care about is what's going to happen in the future. What's going to happen over the next 12 months? Are the earnings going to be more than they were over the past quarters? The past 12 months, the past 24 months, whatever you want to compare the future against. What's the forecast? Is it a lot better? Well, everything on this chart is now an actual except for Q4, which is only 3 quarters an actual. And I'll explain to you what I mean by that. So for every one of these dots, they're telling you what happened over the 4 quarters that followed. So this one that's labeled 2021 Q1, $3.02, is what happened over the sum of the 4 quarters after Q1 2021. So when Q2, Q3, Q4 of 2021 and Q1 of 2022 happened, their total was $3.02. I hope you're with me. Okay, so this one is also actuals. This one is also actuals. This one will become actuals, and my forecast is for $4.46, but it could come in a lot lower than that, especially if Tesla doesn't take the one-time tax favorability I'm forecasting in Q4 from prior year's losses. The Internal Revenue Service, the taxing authority in the U.S., has rules for how much corporations need to pay in tax, and the rule is that if your company has been losing money for a long period of time, they don't make you start paying taxes right away as soon as you become profitable. What you're allowed to do is roll over those losses and hold them on your balance sheet as a deferred tax asset. And then you can use them to offset your taxable corporate income in whatever future year you and your auditors agree it is more likely than not that you will be able to use all of them to offset more than that much taxable income. I hope that makes sense, because I'm not sure I can say it again. So so that's about 45 cents per share worth of benefit, or $1.6 billion that's in my forecast for Q4. So if that doesn't happen, expect a number more like $4 even. All right, that's all I had to say about that. The next chart is exactly the same chart, except with a different y-axis scale. The first chart is on a linear axis scale. You can see here's -$1, 0, $1, 2, 3, 4, 5. These are all evenly spaced apart. That's how you know you're looking at a linear scale. This is the normal scale. The second chart is on a logarithmic scale, which I noted over here for the observant viewer. So what happens here? It doubles with every line. So from 25 cents to 50 cents, it doubles, and then it doubles again to $1, doubles again to $2, doubles again to $4. What's this good for? It's good for showing you exponential growth as a straight line. So this straight line here is exponential growth, only interrupted in Q2 by the Shanghai lockdowns, and then in Q3 by ending the wave, So you've got a little less exponential growth over the most recent couple of quarters here, but still pretty good for your company to grow earnings by big amounts. So a couple of different ways of looking at that, and I promised you one more chart, which is this one. It's Stevenson Indicator. I've made a whole video playlist about Stevenson Indicator if you want to know what it is, so I'm not going to explain it in this video to keep this one pretty short and efficient. But what I do want to note for you on this chart is that I put an arrow here saying the bear market began January 3rd, 2022. Did that news come out on January 3rd, 2022? No, it didn't. You can't tell that it's a bear market until a long time after it started, right? So it was June when finally they came out and said, hey, the bear market began on January the 3rd. Well, what's Stevenson Indicator good for? The first thing I should say is it's good for nothing. You shouldn't trust it. Don't use it for anything. This is not investment advice. Do your own research for entertainment purposes only. Technical analysis is phrenology. All of the other disclaimers. But look at what happened during the bull market, if I can talk. Beginning at the bottom of the COVID freakout, so March 18th of 2020, we were in a bull market. The stock market was doing pretty well, and Tesla did not trade below Stevenson Indicator for the duration of that bull market. Then the bear market began, and what's been happening since then? Well, the stock price has been coming down. Down below Stevenson Indicator, about half of Stevenson Indicator today. Will the stock price go back up to Stevenson Indicator again during the next bull market? We're going to have to wait and see if that happens or not. But that's what I wanted to add as additional context to this chart. And I think that's my video for today. With that, I will say if you've enjoyed today's video, click the like button. If you're not subscribed to my channel, go ahead and subscribe to my channel and click the alert bell to get notified when I publish fresh videos to YouTube. Thank you to everyone who supports me on Patreon or through joining my YouTube channel if you value the work that I'm doing, especially Kathy Kitchler and Halter Ferguson Financial, my executive producers, and I'll see you in the next one.